In terms of technical analysis, well, the positives are that it's simple to grasp, much simpler to grasp than core economic theory. However, the simplicity of technical analysis on the surface can breed contempt, misuse, and misinterpretation of the data. Technical analysis is a study of supply and demand. Technical analysis also is indirectly studying the effect of the fundamentals. For example, if a stock price increases a lot, then the worth of that company increases. Therefore, if that company wanted to buy company B, then it could do with stocks, an additional stock issue or an outright purchase using stocks. This means that the fundamental valuation of that company is increased because they have the ability to issue stocks and buy other companies with those stocks. Therefore, the market action does have interplay with the fundamental side of the business. And vice versa, of course. Very strong fundamentals of a business, strong earnings growth, for example, can impact the marketplace and cause the stock price to increase. So we see here that fundamental and technical analysis is joined at the hip. Also, you have the ability to act on the actual market at a granular level without understanding every facet of a business. You don't need to understand the why, only the what. Technical analysis uses historical information and cyclical trend following to understand the market itself. And we'll certainly dive into cycles in much more depth later on, so you can understand things like the business cycle, seasonal cycle. Also, with technical analysis, there is a much greater focus on timing. You can choose the best company in the world, but if you time it incorrectly, you can lose money. Technical analysis focuses on timing also. However, with technical analysis, some of the negatives are you could get information overload. There are so many indicators, so many different ways of looking at charts and interpreting the data that sometimes you can get lost. So simple approaches, simple yet effective approaches, need to be learned. Many people have no grasp of economic fundamentals when using technical analysis alone, and this can also lead to costly mistakes. If you were buying at the top of the internet bubble back in 2000, when much of the fundamental data was suggesting there's no way earnings could meet the expectation of the valuations, then you are apt to losing a serious amount of money, which many people did. Also, there are too many gurus, hot tips newsletters and tipsters in the marketplace using technical analysis at a very basic level to supposedly give you insights onto how to make money quickly. And this is something we should be very careful of. Many chartists believe they do not need to learn about supply and demand.